Good morning, good afternoon, or good evening, depending on when you are watching this. So, what I wanted to do was put together a quick video on property management statements for you guys. Give you a quick overview and show you a couple common things that you may see, and just explain a couple things and hopefully help you out a little bit. All right, so this is our property management statement. We've used several different property management softwares over the years, and they are all very, very, very similar. It's the best way to describe it is it's like a bank account statement you get from a bank, not a credit card, but a bank. And I will go into that here shortly and explain, how to look at this from a P&L perspective and how to look at it as your owner's statement. So first, I'm just going to do a quick overview. We've got our company's information up top. Your information would be right here. Our company logo, the report name, which is called owner statement. Any properties that you own that is a part of this statement, it would show them all here. The date range, and this is very important because it is very date specific, right? So if this statement period is 9/13/22 through 10/10/22, it is not going to show a transaction that occurred on 9/12/22. You would want to look at the prior statement for that. All right, so next is the beginning balance. And this is what I was referring to earlier, how it's very similar to a bank account statement that you would get that not very many people look at. They check their balance all the time, but most people don't look at their bank statements unless, it's your profession is, a CPA or, bookkeeper or something like that. Most people just check their balance. So, but anyways, I'm going to dive right in. So you got your beginning balance. So what that means as of would have been like 12:01 midnight, right? First time of that day. That was the amount of money that we had in your property's bank account. All right. So I will do some basic math here in a minute. Let me grab my calculator and bring it over. Actually, I think I closed it. Let me reopen it. All right, perfect. All right, so actually, let me do an overview before you start using the calculator. So, anyways, this is your income section. This is the date it was paid. Reference numbers, usually the property address, what type of income it was. If you were getting reimbursed for, say, a water bill, right, it would say water utility. You'd have a second line there. Comments, usually the resident's name. That way, if you have multiple residents, you know which one has paid. The dollar amount. Next is expenses, right? So what you'll see here is this is the date of payment, not the date that in this scenario, this work order occurred, right? This is the date the money left your bank account. So that's definitely a common question we get. Hey, I thought, that work order was done, 2 weeks ago. Yes, Mrs. Owner was, but the contractor just got us their invoice, just got it turned in, and this is the date that we paid them. We usually pay bills every Friday for contractors, so that way they know when to expect when to get paid. Next, this reference section here, you could see a couple different things here. You could see a number. What that means is the check number. This is the transaction with how the money left your bank account. So anyways, if you see a number, that is a check number. If you see EFT, it means we paid that via electronic funds transfer to that contractor. If you see ePay, that means we did a direct deposit, which you can see right here. This is how we paid this owner, direct deposit. So anyways, those would be one of the kind of three things you would see there in the reference. There is the reference on how we paid them. Next is the account that we paid out of. So this is a repair. I'm not going to go into the whole repair, but the repair, you'll get the comment here on what, the work order was for, or, if it's a utility bill as an example, it'll have the time period of the utility bill, right? If it's a quarterly bill, January 1st, 2024 to 3/31/2024, just as an example. So anyways, let me move over here. So this is the dollar amount. This is the expense. So this repair was $105. Next, what you'll see here is a $10.50 management fee charge. So in our property management agreement, we have a maintenance oversight fee. That covers us handling the work order with the resident, right? Getting the work order, reviewing it to make sure it's a legitimate maintenance request, getting a contractor out there, getting before and after photos from the contractor, getting the contractor's invoice, paying them, and accurately recording all of this stuff, which is very important because we prepare your tax statements at the end of the year to give to your tax pro. So anyways, that's what the maintenance oversight fee is for. And this is the charge from it. That is 10% of this number. The next line item is management fee. So you'll see right there, that is whatever the percentage of management fee that was agreed upon with that property. And then next I will cover one other things that you may see sometimes is if you ever have a time period where maybe there's other expenses, right? Like if this said cleaning, right, as an example, like maybe the property was cleaned. You would see over here, it would say cleaning expense and then management fees. And it would be 10% of whatever that number is. So it breaks it out into the different categories. So if you had, one repair, one cleaning, one plumbing, right? In that scenario, you had three different expenses. You would have three different management fees for that maintenance oversight. It's 10% of each one. Next here under other transactions, this will show any money in or out. So if you make a contribution to us or if we make a distribution to you, you will see that. This is the date the transaction was initiated. It's typically 3 to 5, but usually 3 business days. The funds are available in your account, the dollar amount that was sent to you, and then your ending bank balance. So that's how much money is left in your account after we did the distribution. So the way our software and all property management software systems work is most management companies hold a reserve, right, to cover small maintenance bills, utility bills, whatever it may be. So they have a little bit of funds available in case they have some bills they need to pay on your behalf. So that is called the property reserve, the total reserve. So this number is important because the way the systems are set up is we've told the system this is how much we need to hold, that total reserve number. So every penny above that number you get. Every penny up to that number we hold for you on your behalf. So your ending bank balance is what we have in there. So if it's less than that 500, say, you didn't get any income that month for some reason, and we use some of your reserve to pay something, your reserve number here would stay static. It wouldn't change. This reserve is 500. This doesn't mean this is how much you have in your account. This means how much we've told the system to withhold on your behalf. The ending bank balance, again, just like a bank statement, is what's important in the scenario I'm talking about. So next, you've got security deposits held. So total requirements, we should be holding $1,700 on your behalf. Okay. Let's go down to the second page here. So next, on all of our statements, it shows a distribution breakdown. Okay. And what it's doing here is explaining how we got to the number. And I'll show you how to do the math in a second if you ever need to. But this shows the distribution breakdown, right? So 10/10/2022, that's the same date. It's the date the statement was sent out. So on that day, this property had $1738.25 in the bank. Our $500 reserve is right here, so we released $1238.25 to you. So let's grab our calculator. All right, so beginning of the month, right? I got $500 in my account. I add $1425. Okay, that brings me to $1925. Let me go ahead and subtract my expenses. I don't need to do them individually. I can just use the total. 186.75. All right, 1738.25. 1738.25. So, take out my reserve there. 1238.25. That's how much the distribution is. So, really important, beginning balance, ending balance. And then if you want to use this like a P&L, right, if you just look at this snapshot right here, let me see if I can highlight it for you. I cannot. All right, so if you basically just look at this income, expense, and net income and loss, that's the P&L. That's how the property did during this time period. But that doesn't always tell the whole story, right? Because you need to know how much was in your account for us to be able to calculate, and you calculate how much your distribution is. If you had $5,000 in your account as an example, and you just looked at a P&L and you got a distribution for, $6,238.25, that the statement's not going to show you that on a P&L. A P&L just shows you profit and loss. It doesn't track cash. So that's why property management companies use statements just like this, because it needs to track cash for you. So anyways, that's what I wanted to cover on this one. I've got a couple other made up statements over here. Let me grab them, see if I have any other different examples that are worthwhile on showing you guys. Okay, yeah, here's another good one. You see here's the second line item on income. In this scenario, a resident, reimbursed this investor, this property, for a water bill. So that's good. You get to see that there. Yep, this was a test investor contribution, right? That's money you paid to us to pay for something on your behalf. There's a distribution. And everything else I've already covered on here. So let me go ahead and close that one. I've got a couple other ones to see if there's anything of value from these test statements that we got. Let's see, anything of value. Not necessarily. We've already kind of covered everything that's on there. I think I've got a couple more here I saved to my desktop. Yeah, nothing really new on this one. Let me open up this last one here. All right, yep, here we go. All right, so here is one more scenario, or one more thing that I actually missed and didn't cover. Debit, where it says here debit, that just means that it was paid with a card and not like electronically transferred or a check. All right, so next I wanted to talk about tenant prepayments. So I see a lot of questions on these, so I wanted to take a couple minutes and explain them. So here's a recent statement here from an actual client that had a question. So anyways, I did block out their information, but I did want to use this as a quick example for the video and tenant prepays. So in a nutshell, what tenant prepays are is we are holding money that is we have placed in a prepayment account. It's not anyone's yet. So in 99% of the scenarios, it's when you have a new move-in, where someone has paid, I'll give you an example. If they're moving in March 15th, right, we do need to collect 1 month of rent from them. We're not going to just let them move in and just pay a half a month's rent from, March 15th to March 31st. We require a full month's rent, so automatically by doing that, it's going to put half of the rent, half of whatever they paid, into this prepayment account. So it goes into this holding account until, in that scenario, April 1st happens, right? April 1st rent's due, then that becomes as available income to you as the property owner. So anyways, in this scenario, and actually, I'll take a step back. I might as well explain what the other 1% is that the scenario could happen in. So 99% of the time, it's when you have a new move-in. Someone's moving in and they have paid part of next month's rent in advance. The other possibility is you've got a current renter that lives there, and they paid part of next month in advance. Most renters just pay month to month, so they pay their current month's rent that's due. But there's occasional, sometimes, maybe it's tax time and, they want to go ahead and put some money down towards next month's rent or pay off next month's rent, or, maybe their rent was $12.95 and, they wrote a check for $1,300, right? We're not going to deny that money. We'd rather hold on to it for you as the property owner, and just hold that in a prepayment account. So back to this statement here. So we got a new resident, right? You notice on a normal statement, if there's any income, it's right above expenses. So there isn't any, right? It's not income to you yet. This person hasn't moved in yet. We are holding it in a prepayment account. So we've got their $40.22.11, plus the owner's available balance at the time of the statement was $366. That's the beginning balance, less the expenses. All right, so now let me go into the next month really quickly. All right, so this is the following month. Their bank account balance, of course, followed over from ending balance to beginning balance. The money you can see down here, it came out of, that's why there's a subtraction, came out of this prepayment account and it was put into the owner's account. So typically what there is in tenant prepays is, if we haven't allocated it to their security deposit yet, part of it could be that. If there's any fees that they owe us, of course, it could be that too, right? Because nothing is due to anyone until we've actually charged them. And then same thing for rent and, utility bills and things of that nature. So anyways, beginning balance, then you got the income, you got your expenses, net income and loss. But mainly what I wanted to show you guys was how it transferred over and it leaves the tenant prepayment account. The system does that for you automatically. There is nothing that you have to worry about with that one. The system knows what's charged and what's a prepayment. So trust the system. It will take care of it. And that was what I wanted to quickly go over and explain on tenant prepayments. Thanks for listening.